Welcome to the 2025 Safeguard Information Session. In this video, we will explore the key updates, tools, and compliance pathways for the 2024-25 Safeguard Mechanism reporting period. This session is designed to support responsible emitters, auditors, consultants, and compliance professionals in understanding and applying the Safeguard Mechanism effectively. Over the next 30 minutes, we'll guide you through a refresher on the Safeguard Mechanism and its role in emissions management. We'll present key updates for the 2024-25 financial year, including important dates and deadlines to help you stay compliant and well prepared. We'll then provide information on flexible compliance options and other processes, and how to prepare for these applications. This includes discussing multi-year monitoring periods, or MYMPs, trade exposed baseline adjustments, or TEBAs, borrowing adjustments, emissions intensity determination variations. Whether you're preparing to apply for a TEBA, considering an MYMP, or managing a potential variation to your emissions intensity determination, or EID, this session will provide the clarity and practical guidance you need to make informed decisions. We'll also share tips for smooth application processes, highlight common pitfalls, and point you to resources that can support your compliance efforts. To start, I will briefly talk through some of the key dates to be aware of. The 31st of October deadline includes the following. Trade exposed baseline adjustment applications are due. These must include your financial data, emissions figures, and an audit report. It's important to ensure all documentation is complete and accurate to avoid delays. Second, emissions intensity determination applications must be submitted by this date, but only if your facility does not already have an EID in place. If you're unsure whether this applies to you, it's worth confirming as soon as possible. Exemption applications must be submitted by the 31st of October. These are only available to facilities that have been impacted by a natural disaster or criminal activity. If your facility qualifies, make sure your application clearly outlines the circumstances and includes all required evidence. The 31st of October is, of course, also the NGA reporting deadline. More information on NGA reporting can be found on our Clean Energy Regulator website. Moving on, the next key date is the 15th of November 2025. This is the deadline to apply for a multi-year monitoring period, or MYMP. Responsible emitters must submit a detailed emissions reduction plan along with supporting documentation. This is a strategic opportunity to manage emissions over a longer time frame, so early preparation is recommended. Next, we look ahead to the 31st of January 2026. By this date, the Clean Energy Regulator will finalise any variations to emissions intensity determinations. We will also typically process Safeguard Mechanism credit unit applications received before this date by or shortly after the 31st of January. While SMC applications can be submitted after this date, we strongly encourage early submission to ensure timely processing. Following that, the 28th of February 2026 is the deadline to apply for a borrowing adjustment. This allows facilities to borrow from their future baselines. Applications must be signed by an executive officer and meet all eligibility criteria, so it's important to allow time for internal approvals. Then we come to the 31st of March 2026. This is the final date to surrender Australian carbon credit units or Safeguard Mechanism credits to reduce your net emissions before the compliance deadline on the 1st of April. If you're planning to surrender units, make sure everything is in order well before this date. Finally, the Clean Energy Regulator will publish the 2024-25 Safeguard Mechanism data on or before Tuesday the 15th of April 2026. This publication provides transparency and insight into national emissions performance. To wrap up, these dates are critical to ensuring your facility remains compliant and eligible for the full range of emissions management options. We recommend beginning preparations well in advance. Facilities that exceed their baseline must manage their excess emissions by the 1st of April of the following year. Facilities that are still in an excess emissions situation on or after the 1st of April can be subject to strict regulatory penalties. Alongside the surrendering of prescribed carbon units, which at the moment are ACCUs or SMCs, there are several other flexible options that facilities can use to manage excess emissions. Facilities can apply to the CER for a range of flexible options for excess management. These include the multi-year monitoring period, which allows a facility to reduce emissions across a period of 2 to 5 years, becoming a trade-exposed baseline adjusted facility, which may allow them to receive a discounted decline rate, potentially as low as 1% for up to 3 years, borrowing against future baselines, wherein a facility can borrow up to 10% of the following year's baseline and add it to their current year's baseline. In the following year, the facility's baseline will decrease by the borrowed amount plus interest. We will now go into more detail on the specifics of each excess management option. It is also important to consider how these options can and cannot work together. A multi-year monitoring period is one of the flexible excess management options available for responsible emitters with an eligible emissions reduction plan. A multi-year monitoring period allows facilities additional time to implement emissions intensity reduction activities. They can defer an excess emissions situation in initial years over an extended baseline of 2 to 5 years. The application for an MYMP requires facilities to provide a detailed plan outlining how they will reduce emissions below the extended baseline by the end of the monitoring period. If a facility's cumulative emissions exceeds its cumulative baseline at the end of a multi-year monitoring period, it must surrender the required number of ACCUs or SMCs. Additionally, if cumulative emissions are below the facility's cumulative baseline, the facility may be eligible for SMCs. Notably, all multi-year monitoring periods must conclude by the 30th of June 2030. Facilities covered by a multi-year monitoring period cannot then apply for a trade-exposed baseline adjusted determination for the same years. They also cannot apply for borrowing adjustments for years covered by a multi-year monitoring period, and any pre-existing borrowing adjustments for those years will be revoked. The CER has the power to vary or revoke a facility's multi-year monitoring period if the plan is not being implemented, or covered emissions will likely exceed the baseline at the end of the monitoring period, or the information submitted in the application or plan was false or misleading. Responsible emitters can also apply to shorten or extend an existing multi-year monitoring period between 2 to 5 years or revoke it voluntarily. The CER will closely monitor the performance of MYMPs over time. Multi-year monitoring period applications must be submitted by the responsible emitter. This is the person or entity with operational control of the facility. The responsible emitter can submit an application using the CER's online services portal. The application must be signed by an executive officer, such as a CEO, CFO, director, or company secretary. Responsible emitters should be mindful of several key eligibility requirements when applying for a multi-year monitoring period. To be eligible, a responsible emitter must show that the facility's covered emissions exceed or are likely to exceed the baseline for the first year of the MYMP, that there is a firm and credible plan to undertake emissions reduction activities, that it is likely that the emissions reduction plan is sufficient to ensure that the facility's emissions will be at or below its baseline at the end of the proposed MYMP. Applications must be submitted via CER online services by the 15th of November following the first financial year of the proposed multi-year monitoring period. For the 2024-25 financial year, applications are due by the 15th of November 2025 and no extensions can be provided. A detailed guideline about how to comply is available on our website. You can find a link in the video description. One of the crucial aspects of an application is the detailed plan. The surrender of ACCUs or SMCs cannot be part of this plan. Your plan must include what activity will be done, for example, details of equipment upgrades, when the activity will occur, such as a timeline and key milestones, how the activity will reduce emissions, including estimates and assumptions, evidence the activity will occur, for example, board approvals or funding agreements, details of identified risks and mitigation strategies, details of the organisation's capacity to deliver the change. Alongside the detailed plan, the application must also include a plan summary, which, if approved, will be published on the CER website. It is important that this is provided in a form that you are comfortable for the CER to publish. At the conclusion of the multi-year monitoring period, the responsible emitter must submit a performance statement by the 31st of October. This statement should explain how the activities were carried out, whether the planned emissions reductions were achieved, and identify any variations from the original plan. It must also confirm whether the facility remained under the baseline. Once submitted, this performance statement is published on the CER website. You should now have a good understanding of what a multi-year monitoring period is and how the application process works. If you are considering applying for a multi-year monitoring period, please contact us with any questions as soon as possible. Here are a few key tips for a smooth application. Start the application process early. Confirm the facility meets all eligibility criteria. Involve your responsible financial officer and executive officer early on to ensure the signing of the application before the deadline. Be clear and specific. Describe each activity in detail, including what will be done, how, and when. Avoid vague language. The CER must see a clear link between the activity and emissions reductions. Provide evidence. Back up key claims with documentation. Include assumptions, calculations, and supporting data in your forecasts. Identify realistic risks, for example, delays, cost blowouts, or underperformance. Double-check figures, dates, and consistency across your documents. Make sure your detailed plan and summary align. This section provides guidance on what a trade-exposed baseline adjusted or TEBA facility is and outlines the key requirements for applying for a TEBA determination. We'll explore what a TEBA determination involves, how it fits within the broader safeguard mechanism scheme, and key considerations when applying. Responsible emitters can apply for a TEBA if they have a trade-exposed facility using a production variable listed in Schedule 2 of the Safeguard Rule. A TEBA is a 3-year emissions management tool that will reduce a facility's emissions reduction contribution, or ERC value, for the facility. The ERC value is the value which incorporates the decline rate for a financial year into the calculation of a facility's baseline emissions number for that financial year. Facilities generally have annual decline rates of 4.9%. A TEBA can reduce this to as low as 1 to 2%. To reflect this, Schedule 2 of the Safeguard Rule provides a full list of trade-exposed production variables, and these are split into manufacturing and non-manufacturing production variables. To be eligible for a TEBA, a facility must emit more covered emissions in the first financial year than its hypothetical baseline. A facility's hypothetical baseline is the baseline emissions number that would apply for the first financial year if the TEBA determination was not made. It must have a zero borrowing adjustment in that first year and not be in a multi-year monitoring period, or MYMP, at the time of making the application. It must have a trade-exposed primary production variable listed in Schedule 2 of the Safeguard Rule. The assessed cost impact or in excess must also be greater than 3%. That is, the calculated cost to the facility of purchasing ACCUs and/or SMCs to surrender to avoid an excess emissions situation would be greater than 3% of the facility's EBIT revenue. This cost is calculated using the Safeguard Mechanism default prescribed unit price, which is set by the Department of Climate Change, Energy, the Environment and Water, DECU, each year. Depending on if it is a manufacturing facility or not, the facility may be eligible for a minimum ERC of 1 or 2%. It is worth noting that a TIBA facility may still apply for an MYMP if eligible. It just cannot have an MYMP in place at the time of submission, earn Safeguard Mechanism credits, or SMCs, for staying under the adjusted baseline. In order for the Clean Energy Regulator to make a trade-exposed baseline adjustment, or TIBA determination, for your facility, you'll need to submit an application package that meets the legislative requirements. You will need to complete the online form, which is available through online services. Next, your application must include an audit that satisfies both the legislative and financial criteria. The audit requirements for a TIBA are set out in the Safeguard Rule. Because the final audit opinion must address both financial and emissions-related matters, this process may take longer than a standard Safeguard audit. If you're considering a TIBA application, we strongly recommend consulting with your audit provider as early as possible. We also encourage providing supporting documentation. This includes the key data, calculations, or evidence used to complete your application. These materials are essential for verifying the accuracy of the information submitted. In particular, you must include your EBIT calculation if you're a manufacturing facility, or revenue figures if you're a non-manufacturing. Your full application package must contain several key elements. These include current details for both the facility and the responsible emitter, as well as the first financial year the TIBA would apply. You'll need to demonstrate that the facility would be in an excess emissions position for that year based on covered emissions compared to the hypothetical baseline. You must also identify the facility's primary production variable and calculate the assessed cost impact, or ACI. Your EBIT or revenue figures should show that the assessed cost impact exceeds the 3% threshold. If any part of your application is incomplete or lacks sufficient information, the regulator may request further details or decline the application. An application must also be accompanied by an audit report, which can be attached to the application form in online services. Now, let's take a closer look at what's required from the audit component of your TIBA application. To be considered valid, a TIBA application must be supported by an audit report that provides a reasonable assurance conclusion on several key points. First, the audit must confirm the revenue, or EBIT, that is, earnings before interest and tax, for the facility in the first financial year. This includes not only the figure itself, but also the assumptions used in determining that value. Second, the auditor must assess the cost impact for the facility in the same financial year. Again, this includes a review of the assumptions made in calculating that impact. Third, the audit must verify the facility's covered emissions during the proposed first financial year. This is a critical input into the TIBA assessment and must be supported by reliable data. The audit must also confirm that a declaration has been made in the application stating that the facility's covered emissions were not increased for the sole or substantial purpose of influencing the outcome of the TIBA determination. Specifically, the declaration must confirm that emissions were not increased to either secure a TIBA determination or to inflate the emissions reduction contribution, also known as the ERC, for the first year or the 2 years that follow. In addition, the audit must verify the hypothetical baseline for the first financial year, as well as the baseline emissions number for that same period. Finally, the audit must confirm the ERC value for the first financial year, along with the estimated ERC values for the following 2 years. Each of these elements must be addressed in the audit report to ensure the application meets the legislative requirements. If any of these points are missing or unsupported, the regulator may request further information or decline the application. This is why early engagement with your auditor is so important. When preparing for a TIBA, it's important to begin gathering financial and emissions data early. Preparation should start with enough time for the audit component to be completed before the 31st of October. If you're considering other management options, such as an MYMP, you should begin even sooner. To support this process, engage your auditor as early as possible. The TIBA application involves both financial and emissions aspects of your business operations and may take longer than other Safeguard audit requirements. Make use of the CER's TIBA audit template, TIBA guidance, and the department's EBIT guidelines. If you or your auditor are unable to find answers within the legislation or guidance, seek assistance from the regulator. Keep in mind the key timeframes. TIBA applications for the 2024-25 period must be submitted on or before the 31st of October 2025. Borrowing adjustments are one of the flexible options available for responsible emitters to manage a facility's excess emissions. A borrowing adjustment determination allows a facility to borrow from its future baseline, bringing forward a portion of next year's baseline to cover or reduce an exceedance this year, as shown in the diagram. This adjustment reduces the following year's baseline by the borrowed amount plus interest. This interest rate is 2% for financial years ending before the 1st of July 2026 and 10% for financial years beginning on or after the 1st of July 2026. Additionally, the maximum that can be borrowed is 10% of the facility's unadjusted baseline for the first year the borrowing adjustment would apply. Before considering the use of a borrowing adjustment, it is important to understand how they interact with other compliance tools. A borrowing adjustment cannot be used if the facility is in a multi-year monitoring period, or MYMP, for that year, or if Safeguard Mechanism credits, SMCs, have been issued for that year. Additionally, a TIBA determination cannot be made for a year affected by a borrowing adjustment. However, if these conditions are met, a borrowing adjustment can work alongside a facility's surrender of prescribed carbon units. For example, a facility with a larger excess may borrow up to 10% from next year's baseline to reduce its current excess and then use ACCUs or SMCs to manage the remainder of its excess and meet its compliance obligations. Borrowing adjustment applications must be submitted by the responsible emitter. This is the person or entity with operational control of the facility. The responsible emitter can submit an application using the CER's online services portal. The application must be signed by an executive officer, such as a CEO, CFO, director, or company secretary. Responsible emitters should be mindful of several key eligibility requirements when applying for a borrowing adjustment determination. To be eligible, no SMCs can be issued to the facility in the year of application. The facility cannot be covered by an MYMP for that year. The borrowing amount must not exceed 10% of the unadjusted baseline. The facility's covered emissions must be likely to exceed 100,000 tonnes of carbon dioxide equivalent in the following year. Applications must be submitted by 28th of February following the end of the financial year. For the 2024-25 financial year, applications are due by the 28th of February 2026. If you're considering applying for a borrowing adjustment, there are a few key steps to keep in mind to ensure a smooth process. Begin the application early to allow enough time for preparation and review. Confirm that the facility meets all eligibility criteria and check that the borrowing amount does not exceed 10% of the unadjusted baseline. It's also helpful to forecast emissions to demonstrate the facility's designated large facility status for the following year. Finally, involve your executive officer early to ensure the application is signed and submitted before the deadline. Now that we've talked about the flexibility options available to help you comply with the scheme, it's important to also note that the regulator may make changes to your facility's emissions intensity determination, or EID, if a change has occurred. This affects how your facility's baseline emissions number is calculated. The CER will notify you if it has varied your facility's EID by the 31st of January following the first financial year to which the variation applies. The CER can vary your facility's EID if specific types of changes occur. We'll now discuss what types of changes can lead to a variation. The regulator may vary your facility's EID if its emissions in a historical year differ by at least 1% from the amount specified in the application for the emissions intensity determination. In simpler terms, this applies when a facility's historical emissions vary from those reported in the most recent ENGA submission. For the regulator to make an EID variation, we must also be satisfied that the difference in emissions is due to one of three conditions. The first is a relevant regulatory change, such as updates to global warming potentials or amendments to the Safeguard Mechanism rule. In this case, no action is required from the responsible emitter. The second condition is a change in the ENGA reporting method used for the facility. If a facility adopts a different reporting method, the regulator will initiate a review and will require more information from you to decide whether to vary your facility's EID. If you intend to move to a different method, contact the Safeguard team with your facility name, the affected production variables, and the intended change in reporting. The third condition is a change in activities at the facility after an emissions intensity determination has been made. Again, the regulator may need more information from you so we can decide whether to vary your EID. If you believe this scenario may apply to your facility, please contact the Safeguard team to discuss your situation. There are 5 steps that will be undertaken in the process of a variation being made. Step 1. The regulator begins the variation process by notifying the responsible emitter of its intent to vary the facility-specific emissions intensity. This notice outlines the proposed change to the emissions intensity number and invites the responsible emitter to respond in writing within a defined time frame. Step 2. The formal notice will provide the proposed revised facility-specific emissions intensity number and invite the responsible emitter to provide a written response within a specified timeframe. Step 3. The regulator may request further information relevant to the proposed variation. This step is designed to ensure the decision is well informed and supported by appropriate evidence. Step 4. Once the response period ends, the regulator has 30 days to review your submission and any additional information gathered and decide whether to proceed with the EID variation. If approved, the regulator will finalise the variation by the 31st of January following the first financial year to which the variation applies. Step 5. After the variation is made, the regulator will notify you and publish the updated emissions intensity determination on its website. Thank you for joining us for the 2025 Safeguard Information Session. We hope this session has provided you with the clarity and practical tools needed to navigate the 2024-25 Safeguard reporting period. As we've explored today, the Safeguard mechanism offers a range of flexible compliance options to support responsible emitters in meeting their obligations while planning for long-term emissions reductions. Whether you're considering a multi-year monitoring period, applying for a TIBA, or managing a variation to your EID, early preparation and a clear understanding of the requirements are the key to success. We now encourage you to take proactive steps in preparing your submissions. Begin by reviewing the key dates and planning your application timeline well in advance to avoid last-minute delays. Early engagement with your internal teams and auditors is essential, particularly for submissions that require executive sign-off or audit reports. Using the Clean Energy Regulator's online services portal will help you manage your facility's information efficiently, access the necessary forms, and track the progress of your submissions. If you have any questions or need guidance at any stage, don't hesitate to contact the Clean Energy Regulator. We're here to support you throughout the process. This session is just one part of our broader support offering. Additional resources, including updated guidance documents, are available on the CER website. Check the events page of our website for details of live Q&A sessions. A link is included in the video description. Thank you again for your time.